Year 102967, February 10, 2000. Bibiano, Banas, Jr., Petitioner, Mrs. Court of Appeals. Aquilino Larin, Rodolfo Tuazon, and Procopio Talon. Respondents. Facts. On February 20th, 1976, Petitioner Bibiano, Banas, Jr. sold to Ayala Investment Corporation, Ayala, 128,265 square meters of land located at Bayanan, Muntinlupa, for 2,308,770 pesos. The deed of sale provided that upon the signing of the contract, Ayala shall pay 461,754 pesos. The balance of 1,847,016 pesos was to be paid in 4 equal consecutive annual installments with 12% interest per annum on the outstanding balance. Ayala issued one promissory note covering 4 equal annual installments. Each periodic payment of 461,754 pesos shall be payable starting on February 20, 1977, and every year thereafter, or until February 20, 1980. The same day, petitioner discounted the promissory note with Ayala for its face value of 1,847,016 pesos, evidenced by a deed of assignment signed by the petitioner and Ayala. Ayala issued 9 checks to petitioner, all dated February 20th, 1976, drawn against Bank of the Philippine Islands with the uniform amount of 205,224 pesos. In his 1976 income tax return, petitioner reported the 461,754 initial payment as income from disposition of capital asset. Selling price of land, 2,308,770, less initial payment of 461,754. Unrealized gain of 1,847,016. 1976 Declaration of Income on Disposition of Capital Asset subject to tax. Initial payment 461,754. Less cost of land and other incident expenses 76,547.90. Income 385,206.10. Income subject to tax 385,206.10 times 50%, 192,603.65. In the succeeding years until 1979, petitioner reported a uniform income of 230,877 pesos as gain from sale of capital asset. In his 1980 income tax amnesty return, petitioner also reported the same amount of 230,877 as the realized gain on disposition of capital asset for the year. On April 11, 1978, then Revenue Director Mauro Calagiao authorized tax examiner Rodolfo Tuazon and Procopio Talon to examine the books and records of petitioner for the year 1976. They discovered that petitioner had no outstanding receivable from the 1976 land sale to Ayala and concluded that the sale was cash and the entire profit should have been taxable in 1976 since the income was wholly derived in 1976. Tuazon and Talon filed their audit report and declared a discrepancy of 2,095,915 pesos in petitioner's 1976 net income. They recommended deficiency tax assessment for 2,473,673 pesos. Meantime, Aquilino Larin succeeded Calagio as Regional Director of Manila Region 4-A. After reviewing the examiner's report, Lorene directed the revision of the audit report with instruction to consider the land as capital asset. The tax due was only 50% of the total gain from sale of the property held by the taxpayer beyond 12 months pursuant to Section 34 of the 1977 National Internal Revenue Code. The deficiency tax assessment was reduced to 936,598 pesos and 50 centavos, inclusive of surcharges and penalties for the year 1976. On June 27, 1980, Respondent Lorene sent a letter to petitioner informing of the income tax deficiency that must be settled immediately. On September 26, 1980, petitioner acknowledged prior receipt of the letter but insisted that the sale of his land to Ayala was on installment. On June 8, 1981, the matter was endorsed to the acting chief of the legal branch of the National Office of the BIR. The chief of the tax fraud unit recommended the prosecution of a criminal case for conspiring to file false and fraudulent returns in violation of Section 51 of the Tax Code against petitioner and his accountants, Andres P. Alejandre and Conrado Banas. On June 17, 1981, Lorene filed a criminal complaint for tax evasion against the petitioner. On July 1, 1981, news items appeared in the now defunct Evening Express with a headline, BIR charges realtor, and another in the defunct Evening Post with a news item, BIR wraps realtor, two accountants. Another news item also appeared in the July 2, 1981 issue of the Bulletin Today entitled, Three-Phase 1 Million Tax Evasion Wraps. All news items mentioned petitioner's false income tax return concerning the sale of land to Ayala. On July 2, 1981, petitioner filed an amnesty tax return under PD 1740 and paid the amount of 41,729 pesos and 81 centavos. On November 2, 1981, petitioner again filed an amnesty tax return under PD 1840 and paid an additional amount of 1,525 pesos and 62 centavos. In both, petitioner did not recognize that his sale of the land to Ayala was on cash basis. Reacting to the complaint for tax evasion and the news reports, petitioner filed with the RTC of Manila an action for damages against respondents Lorene, Tuazon, and Talon for extortion and malicious publication of the BIR's tax audit report. He claimed that the filing of criminal complaints against him for violation of tax laws were improper because he had already availed of two tax amnesty decrees, PD 1740 and 1840. The trial court decided in favor of the respondents and awarded Lorene damages as already stated. Petitioner seasonably appealed to the Court of Appeals. In its decision of November 29, 1991, the respondent court affirmed the trial court's decision thus. The finding of the court that plaintiff appellant's action against defendant appellee Lorene were unwarranted and baseless, and as a result thereof, defendant appellee Lorene was subjected to unnecessary anxiety and humiliation, is therefore supported by the evidence on record. Defendant appellee Lorene acted only in pursuance of the authority granted to him. In fact, the criminal charges filed against him in the Tanod Bayan and the City Fiscal's Office were all dismissed. Wherefore, the appeal judgment is hereby affirmed in toto. Hence, this petition wherein petitioner raises before us the following queries. 1. Whether the Court of Appeals erred in its interpretation of pertinent tax laws. Thus, it failed to appreciate the correctness and accuracy of petitioner's return of the income derived from the sale of the land to Ayala. Number 2. Whether the respondent court erred in not finding that there was an alleged attempt to extort money from petitioner by private respondents. 3. Whether the respondent court erred in its interpretation of Presidential Decrees number 1740 and 8040, among others, petitioner's immunity from criminal prosecution. 4th, whether the respondent court erred in its interpretation of well-established doctrines of this honorable court as regard the award of actual, moral, and exemplary damages in favor of respondent Lorraine. In essence, petitioner asked the court to resolve seriatim the following issues: whether respondent court erred in ruling that there was no extortion attempt by BIR officials. 2. Whether respondent court erred in holding that PD 1740 and 8040 granting tax amnesties did not grant immunity from tax suits. 3. Whether respondent court erred in finding the petitioner's income from the sale of land in 1976 should be declared as a cash transaction in his tax return for the same year, because the buyer discounted the promissory note issued to the seller on future installment payments of the sale on the same day of the sale. 4. Whether respondent court erred and committed grave abuse of discretion in awarding damages to respondent Lorraine. The first issue on whether the Court of Appeals erred in finding that there was no extortion involves a determination of fact. The Court of Appeals observed, the only evidence to establish the alleged extortion attempt by defense appellees is the plaintiff appellant's self-serving declarations. As found by the court of co, said attempt was known to plaintiff appellant's son-in-law and counsel on record, yet said counsel did not take the witness stand to corroborate the testimony of plaintiff. As repeatedly held, findings of fact by the Court of Appeals, especially if they affirm factual findings of the trial court, will not be disturbed by this court unless these findings are not supported by evidence. Similarly, neither should we disturb a finding of the trial court and appellate court that an allegation is not supported by evidence on record. Thus, we agree with the conclusion of respondent court that herein private respondents, on the basis of evidence, could not be held liable for extortion. And the second issue of whether PD numbers 1740 and 8040, which granted tax amnesties, also granted immunity from criminal prosecution against tax offenses, the pertinent sections of these laws state: PD 1740, condoning penalties for certain violations of the income tax law upon voluntary disclosure of undeclared income for income tax purposes and requiring periodic submission of net worth statement. Section 1. Voluntary disclosure of correct taxable income. Any individual who, for any or all of the taxable years 1974 to 1979, had failed to file a return is hereby allowed to file a return for each of the aforesaid taxable years and accurately declare therein the true and correct income, deductions, and exemptions, and pay the income tax due per return. Likewise, an individual who filed a false or fraudulent return for any taxable year in the period mentioned above may amend his return and pay the correct amount of tax due after deducting the taxes already paid, if any, in the original declaration. Emphasis hours. Section 5. Immunity from penalties. Any individual who voluntarily files a return under this decree and pays the income tax due thereon shall be immune from the penalties, civil or criminal, under the National Internal Revenue Code arising from failure to pay the correct income tax with respect to the taxable years from which an amended return was filed, for which an original return was filed, in cases where no return has been filed for any of the taxable years 1974 to 1979, provided, however, that these immunities shall not apply in cases where the amount of net taxable income declared under this decree is understated to the extent of 25% or more of the correct net taxable income. Emphasis hours. PD 1840, granting a tax amnesty on untaxed income and or wealth earned or acquired during the taxable years 1974 to 1980, and requiring the filing of the statement of assets, liabilities, and net worth. Section 1. Coverage. In case of voluntary disclosure of previously untaxed income and/or wealth, such as earnings, receipts, gifts, bequests, or any other acquisition from any source whatsoever, realized here or abroad, or by any individual taxpayer which are taxable under the National Internal Revenue Code, as amended, the assessment and collection of all internal revenue taxes, including the increments or penalties on account of non-payment, as well as all civil, criminal, or administrative liabilities arising from or incident thereto under the National Internal Revenue Code, are hereby condoned, provided that the individual taxpayer shall pay. Emphasis hours. Section 2. Conditions for immunity. The immunity granted under Section 1 of this decree shall apply only under the following conditions. A. Such previously untaxed income and/or wealth must have been earned or realized in any of the years 1974 to 1980. B. The taxpayer must file an amnesty return on or before November 30, 1981, and fully pay the tax due thereon. C. The amnesty tax paid by the taxpayer under this decree shall not be less than $1 million per taxable year. And D. The taxpayer must file a statement of assets, liabilities, and net worth as of December 31st, 1980, as required under Section 6 thereof. Emphasis hours. It will be recalled the petitioner entered a deed of sale perpetually on installment. On the same day, he discounted the promissory note covering the future installments. The discounting seems questionable because ordinarily, when a bill is discounted, the lender, example, banks, financial institution, charges or deducts a certain percentage from the principal value as its compensation. Here, the discounting was done by the buyer. On July 2, 1981, 2 weeks after the filing of the tax evasion complaint against him by respondent Lorraine on June 17, 1981, petitioner availed of the tax amnesty under PD 1740. His amended tax return for the years 1974 to 1979 was filed with the BIR office of Valenzuela, Bulacan, instead of Manila, where the petitioner's principal office was located. He again availed of the tax amnesty under PD 1840. His disclosure, however, did not include the income from his sale of land to Ayala on cash basis. Instead, he insisted that such sale was on installment. He did not amend his income tax return. He did not pay the tax, which was considerably increased by the income derived from the discounting. He did not meet the twin requirements of PD 1740 and 1840, declaration of his untaxed income and full payment of tax due thereon. Clearly, the petitioner is not entitled to the benefits of PD numbers 1740 and 1840. The mere filing of tax amnesty return under PD 1740 and 1840 does not ipso facto shield him from immunity against prosecution. Tax amnesty is a general pardon to taxpayers who want to start a clean tax slate. It also gives the government a chance to collect uncollected tax from tax evaders without having to go through the tedious process of a tax case. To avail of a tax amnesty granted by the government and to be immune from suit on its delinquencies, the taxpayer must have voluntarily disclosed his previously untaxed income and must have paid the corresponding tax on such previously untaxed income. It also bears noting that a tax amnesty, much like a tax exemption, is never favored nor presumed in law, and if granted by statute, the terms of the amnesty, like that of a tax exemption, must be construed strictly against the taxpayer and liberally in favor of the taxing authority. Hence, on this matter, it is our view that petitioner's claim of immunity from prosecution under the shield of availing tax amnesty is untenable. On the third issue, petitioner asserts that his sale of the land to Ayala was not on cash basis, but on installment, as clearly specified in the deed of sale, which states that for any consideration of the sum of £2,308,770 pesos Philippine currency to be paid as follows. 1. 461,754 upon the signing of the deed of sale, and number 2, the balance of 1,847,016 pesos to be paid in 4 equal consecutive annual installments with interest thereon at the rate of 12%, beginning on February 20, 1976. Said installments to be evidenced by 4 negotiable promissory notes. Petitioner resorts to Section 43 of the NIRC and Section 175 of the Revenue Regulation No. 2 to support his claim. In the sale of mortgage property, the amount of the mortgage, whether the property is merely taken subject to the mortgage or whether the mortgage is assumed by the purchaser, shall be included as part of the selling price, but the amount of the mortgage, to the extent it does not exceed the basis to the vendor of property sold, shall not be considered as part of the initial payments or of the total contract price, as those terms are used in Section 43 of the Code, in Section 174 and 176 of these regulations. And in this section, the term initial payments does not include amounts received by the vendor in the year of sale from the disposition to a third person of notes given by the vendee as part of the purchase price, which are due and payable in subsequent years. Commissions and other selling expenses paid or incurred by the vendor are not to be deducted or taken into account in determining the amount of the initial payments, the total contract price or the selling price. The term initial payments contemplates at least one other payment in addition to the initial payment. If the entire purchase price is to be paid in a lump sum in a later year, there being no payment during the year, the income may not be returned on the installment basis. Income may not be returned on the installment basis where no payment in cash or property, other than evidence of indebtedness of the purchaser, is received during the first year, the purchaser having promised to make 2 or more payments in later years. Petitioner asserts that Section 43 allows him to return as income in the taxable years involved the respective installments as provided by the deed of sale between him and Ayala. Consequently, he religiously reported his yearly income from sale of capital asset subject to tax as follows. Year 1977, 50%, 461,754, equivalent to 230,877. 1978, 230,877. 1979 and 1980, 230,877, respectively. Petitioner says that his tax declarations are acceptable modes of payment under Section 175 of the Revenue Regulations. Number 2. The term initial payment, he argues, does not include amounts received by the vendor which are part of the complete purchase price, is still due and payable in subsequent years. Thus, the proceeds of the promissory notes, not yet due, which he discounted to Ayala, should not be included as income realized in 1976. Petitioner states that the original agreement in the deed of sale should not be affected by the subsequent discounting of the bill. On the other hand, respondents assert that taxation is a matter of substance and not of form. Returns are scrutinized to determine if transactions are what they are and not declared to evade taxes. Considering the progressive nature of our income taxation, when income is spread over several installment payments through the years, the taxable income goes down and the tax due correspondingly decreases. When payment is a lump sum, the tax for the year proportionately increases. Ultimately, a declaration that the sale is on installment diminishes government taxes for the year of initial installment as against a declaration of cash sale where taxes on the government is larger. As a general rule, the whole profit accruing from a sale of property is taxable as income in the year the sale is made. But if not all of the sale price is received during such year, and the statute provides that income shall be taxable in the year in which it is received, the profit from an installment sale is to be apportioned between or among the years in which such installment are paid and received. Section 43 and Section 175 says that among the entities who may use the above-mentioned installment method is a seller of real property who disposes his property on installment. provided that the initial payment does not exceed 25% of the selling price. They also state what may be recorded as installment payment and what constitutes initial payment. Initial payment means the payment received in cash or property, excluding evidences of indebtedness due and payable in subsequent years, like promissory notes or mortgages, given of the purchaser during the taxable year of sale. Initial payment does not include amounts received by the vendor in the year of sale from the disposition to a third person of notes given by the vendee as part of the purchase price, which are due and payable in subsequent years. Such disposition or discounting of receivables is material only as to the computation of the initial payment. If the initial payment is within 25% of total contract price, exclusive of the proceeds of discounted notes, the sale qualifies as an installment sale. Otherwise, it is a deferred sale. Although the proceed of a discounted promissory note is not considered part of the initial payment, it is still taxable income for the year it was converted into cash. The subsequent payments or liquidation of certificates of indebtedness is reported using the installment method in computing the proportionate income to be returned during the respective year it was realized. Non-dealer sales of real or personal property may be reported as income under the installment method provided that the obligation is still outstanding at the close of that year. If the seller disposes the entire installment obligation by discounting the bill or the promissory note, he necessarily must report the balance of the income from the discounting, not only income from the initial installment payment. Where an installment obligation is discounted at a bank or finance company, a taxable disposition results. Even if the seller guarantees its payment, continues to collect on the installment obligation, or handles repossession of merchandise in case of default. This rule prevails in the United States. Since our income tax laws are of American origin, interpretations by American courts on our parallel tax laws have persuasive effect on the interpretation of these laws. Thus, by analogy, all the more would a taxable disposition result when the discounting of the promissory note is done by the seller himself. Clearly, the indebtedness of the buyer is discharged, while the seller acquires money for the settlement of his receivables. Logically then, the income should be reported at the time of the actual gain. For income tax purposes, income is an actual gain or actual increase of wealth. Although the proceeds of a discounted promissory note is not considered initial payment, still it must be included as taxable income of the year it was converted to cash. When petitioner had the promissory notes covering the succeeding installment payments of the land issued by Ayala, discounted by Ayala itself on the same day of the sale, he lost entitlement to report the sale as a sale on installment since a taxable disposition resulted and petitioner was required by law to report in his returns the income derived from the discounting. What petitioner did is tantamount to an attempt to circumvent the rule on payment of income taxes gained from the sale of the land to Ayala for the year 1976. Finally, on the question of moral damages, it will be noted that in above cases, the parties who were awarded moral damages were not public officials, considering that here the award is in favor of a government official in connection with his official function. It is with caution that we affirm granting moral damages, for it might open the floodgates for government officials counterclaiming damages in suits filed against them in connection with their functions. Moreover, we must be careful lest the amounts awarded make citizens hesitate to expose corruption in the government for fear of lawsuits from vindictive government officials. Thus, conformably with our declaration that moral damages are not intended to enrich anyone, we hereby reduce the moral damages award in this case from $200,000 to $75,000, while the exemplary damage is set at $25,000 only. Wherefore, the assailed decision of the Court of Appeals dated November 29, 1991 is hereby affirmed with modification so that the award of actual damages are deleted, and the petitioner is hereby ordered to pay respondent Lorin moral damages in the amount of $75,000, exemplary damages in the amount of $25,000, and attorney's fees in the amount of $50,000. So ordered.